in swing trading, we are dealing with higher time frames. For me,
Yeah.
I am more comfortable on the 4 hour.
4 hour time
4 hour stop losses are not small. They are not like day trading or 50 minutes time frame stop losses.
Okay.
So that is what I wanted to see how you go about your stop loss.
Okay. So it's mostly the stop loss Asia.
Yeah.
Okay. Cool. So let's see how I can explain it. Um, I'll try to do it in a way that I'll try to do it in a way that's explanatory, like more graphical, and I'll probably show you on the chart as well. So if your issue is with a stop loss, there's a few things you need to look at first before even looking at the stop loss. So I want us to use a simple example, something like something like an uptrend. So let's just see what happens in an uptrend. All right. So in an uptrend, if price moves to the upside, it pulls back. It moves to the upside, there's a pullback, and it moves to the upside, then there's a pullback. You can see this easily, right?
Okay.
So on any chart, you can see price moving to the upside and pulling back, upside and pulling back. Now you know you're dealing with an uptrend. So what happens when you have an uptrend? So if you have an uptrend, you're waiting for the pullbacks to come in, right? If you have 4 time frames, for example, let's say you have 4 time frames. If you have the daily time frame, if you have, let's say, the 8 hour time frame, if you have the 4 hour time frame, and if you have, let's say, the hourly time frame, or let's do 15-minute time frame and the 1 hour time frame. So do you think an uptrend on a daily time frame is going to look different to an uptrend on the 15-minute time frame?
Certainly.
All right, so your answer is definitely, right? So if I have an uptrend on the daily time frame, something like this, and I have an uptrend on the 8 hour time frame, and let's say I have an uptrend on the 4 hour time frame, and let's look at an uptrend on, let's say, the 15-minute time frame. So you might see like lots of this, something like this, price moving, right?
Yeah.
So will you say price is still going to the upside on the daily time frame, price is still moving to the upside on the 8 hours, and price is still moving to the upside on the 4 hour time frame, and on the 15-minute time frame, price is still moving to the upside? Will you agree?
Yes, they are all in an uptrend.
So they're all in an uptrend. So what you're seeing on each of these time frames, it's an impulse. For example, from here, it's an impulse to this area, then you get a correction. It's the same thing. It's an impulse to this area, then you get a correction. So the impulse correction applies on every time frame. So it's just like you're looking at price in a fractal nature. So what happens on the daily time frame? If I remove this piece right here, that is daily, and I remove the 8 hour time frame, if I was hiding the time frames, it would be difficult for you to tell me if the uptrend is on the 8 hour time frame or on the 4 hour time frame. It would be completely difficult for you. The only reason you can look at the chart and say this is 8 hours, 4 hours, sometimes it's just because of you seeing the symbol and the thing on top that's 4 hours. If I take it out, it'll be difficult for you to tell me. If I put a 15-minute chart and I hide the times and all those things, it'll be difficult because you cannot tell me looking at that chart, this is the 8 hours, this is the 4 hours, or this is the 15-minute. So when you're having difficulties with the stop loss, it's not just a problem of the stop loss. It's a deeper problem than just the stop loss placement. It means there is something wrong with the setup you're looking at. Because if you're looking for a pullback to buy, a pullback to buy on a daily time frame is an impulse correction. On the 8 hour time frame, it's an impulse correction. On the 4 hour time frame, it's an impulse, it's still a correction. On the 15-minute time frame, it's still going to be an impulse correction. So the stop loss placement can only be a problem if the entire setup is not done properly. Alright, let's take for example, we're looking at this space. So we're looking at this space. If I had to buy off of this area, I'll put a stop loss right here. Here's on the daily time frame, right? And let's say we're taking profit of the next swing move right here. For example, if we had to do the same thing on the 8-hour time frame, this is what we're going to do. And you're very correct when you say the pip difference is gonna differ. So the pip difference on the daily is gonna be different from the pip difference on the hourly and the 4 hours. And let's put the same thing on this time frame. So let's do something like this. So if you're doing a swing move, for example, yes, you're trying to hold these positions for long, and at the same time, you might have a compromise because of the stop loss and everything, but it depends on your rate, right? It depends on your rate. I'll probably show you the position we had on gold the other day. So let's put this piece right here. Perfect. So when you're calculating the when you're calculating the stop loss on each time frame, the stop loss is not calculated based on the time frame. You're calculating your stop loss based on the structure you're seeing. It's not time frame dependent. You get. So a pullback and a correction is a pullback correction on all time frames. Yes, on lower time frames it's going to be a higher stop loss, and on bigger time frames it's going to be a huge stop loss. But the stop loss is not time frame. It's not. So when you're trying to put a stop loss, the first thing that comes to your mind is not the time frame. The first thing that comes to your mind is, do you have a valid setup? So your setup, if you break down your setup correctly, then at the end of it, you should be able to place your stop loss at a point where price becomes invalidated if that stop loss gets hit. So if your stop loss gets taken out, then the setup becomes invalid. That is your main concern. It's not about how many pips it is. It's not about the distance. So you can have a stop loss here. Let's put this. You can have this stop loss on the daily time frame, this white, and price still comes to the downside. So for example, it starts moving, it takes you out, and then it starts moving to the upside. Right?
Yeah.
And you can have a very tight stop loss like this on the 15-minute time frame. You can have a very tight stop loss like this, and price just taps in and it starts moving to the upside. So the stop loss being tight or being wide, first, it has nothing to do with the time frame. But it has everything to do with your setup. So how do you read this pullback that is coming in? Because if you don't read this pullback correctly, and let's say you get in too early, for example, if you got in at this area right here, you know what, let's put another one. If you didn't read it correctly and you got in at an area like this, so you see this is on the 15-minute time frame. So even if you had to do the same stop loss, price was going to take you out before moving to the upside. And even if you said, all right, I want to do 2 times the stop loss, there's still that possibility that price is going to take you out. But if you do your read correctly, and as the pullback comes in, and then it slows down, and then it starts turning to the upside, even if you put a very tight stop loss, you can still survive this. So the stop loss is based on the structures you're looking at. It's based on the setup. So I like looking at it this way. The stop loss is based on everything you've studied. So if you studied from A to Z, at the end of the course and the end of any program, you can take a program from any person out there. The person has to show you what the structures they're looking at and what makes a structure valid. If you understand what makes that structure valid and what invalidates that structure, then you can place a stop loss. During a call like this, it's difficult for me to look at just your setups and say, all right, cool, you're supposed to place your stop loss here. No, because that's not where the issue is coming from. The issue is coming from the entire material, like everything before the stop loss. It has to do with you understanding, for example, a move like this, you understanding this build up to the upside. You need to understand that build up. And as price starts correcting to the downside, as the pullback starts coming in, if you understand where the pullback has that high tendency to switch and start moving again to the upside, then you can place your stop loss. You can make it tighter, you can make it bigger, depending on the structures you're looking at. And depending on, so if it's at the point of interest, for example, so let's say price is on the 8-hour time frame, price gets to this area. So you're looking at this space right here. As price gets to this point, if this area is a point where you're paying attention to, right? You're not just placing your stop loss directly below this point. You might wait a little bit for price to come, react at this point, and as it starts moving to the upside, it creates structures on lower time frames. Then you can step down to these lower time frames and start putting your stop loss because you have seen the interaction of price at that point and you have seen price trading away from it. So the stop loss placement is not an issue. And when you look at it, it has nothing to do with you swing trading or you scalping, but it has everything to do with this, with the setup you're looking at. What is your playbook like? Because your playbook should tell you where that stop loss has to go. It needs to tell you what makes the setup completely invalid. So I'll show you the space right here. I think I had, let's clean this. Oh, sorry. So let's clean everything and let's look at this space right here. So I was in this trade last week. So I had a buy off of this area and we took prices to, I think once I had an invalidation of this trend line. So let's break this space down just a little bit so we can make sense of it, right?
Oh.
Let's break this down and I'll show you. And I'll show you what, there's different ways I'll approach this and different areas I'll have placed my stop loss at. So yeah, let's look at this. Perfect. So I had this structure. Let's take this out, clean everything. So at the time when I was looking at this space, so this on the 4-hour time frame, I was paying attention to, I think it was this trend line. Perfect. So let's put this trend line. I'll make it visible for you and we'll take this as an example. Can you see the trend line?
Yeah.
All right, cool. So during the market focus and everything, this is the same trend line I've been talking about, right? So at the time, this is all we had. So price was still coming to the downside. So we had previous price action already. Price was moving to the upside. There was this impulsive move and price had to come to the downside. So my question is, where will you put your stop loss when price starts coming to the downside? So if you look at this space right here, I'll show you a few things. If you place your stop loss as price is coming to the downside, let's say you get an entry right here. You get an entry here and you do a very wide stop loss like this and you're taking prices off of these highs. Just for an example, right? Price starts moving and let's say you only close your position once price gets to your target point. And in this case, your target point has to be this area right here, right? So here's your target point and you're waiting for prices to get to this point so you can close your position. So what happens? You get a good entry, minimal drawdown. Price starts moving to the upside. And let's say you just walked away and then you come back and this is taking you out, right? It took you out. So let's keep that on the chart. So that was your first entry right there. Price took you out. Now you had a second entry, which was the entry I had after that. So you had another entry. I think I had an entry around this area and I had a stop loss below this area and I was going again for the same highs right there. Perfect. So let's keep this. Now you look at these two trades, right? The first one had a wider stop loss and you still got stopped out. The second one, the stop loss compared to this one is smaller and I didn't get stopped out. So what's the idea behind the stop loss placement? And if I didn't tell you this was a 4-hour time frame, you wouldn't be thinking about this distance right here. So if I didn't tell you this is a 4-hour time frame, this distance is not going to make sense to you.
Yeah.
You wouldn't even think about it. The only reason you get worked up and you get worried is because now I'm looking at this on the 4-hour time frame. It's like it's too wide on the 4-hour time frame. And sometimes you're looking at what people are having online as well. And somebody is going to post something and you see the entry and you see the stop loss right here. And you're like, how do you get those stop losses so close and so tight? And you need to understand, when you do this over time, you improve, you get better, and you can tie in your stop loss. It comes also with the experience and all those things. So your focus in the beginning shouldn't be about Where you placing your stop loss if you're swing trading? It doesn't matter if it's a swing trade, if it's a scalp, if it's an intraday, but it depends on the structure you're looking at. So this pullback in this, so what the reason I use this is because if you're looking at this pullback, you had an impulsive move to the upside right here. So you had price moving from point A all the way to point B. And let's use this piece right here as an example. If you're trading from point A to point B, then you're waiting for pullbacks to come in. So this is how I look at prices. If you have an impulse, then you wait for a correction, and then you look for an opportunity to buy again to the upside. So in a situation like this, I was sat here looking at this pair, and I didn't take the buys off of this area. I didn't do any buy around an area like this because I was waiting for my pullback to come in. And while waiting for the pullback, I wanted to see the pullback coming back to this area, which is something I've spoken about already, and I like calling them pivot points, because if price shows you it's been reacting from those areas, then you want to use it like a footprint and just see what these guys are doing, because every time price pulls back to or close to this area, you've seen reactions and you've seen buys to the upside. This, it didn't really come that close, that's fine, but you're seeing these reactions and you're seeing these massive movements to the upside. Are you seeing? So
Yeah.
in a situation like this, for example, I was looking at this piece of price action, and I was looking at the pullback that was coming in, and the first thing I told myself is, I'm not taking the buys off of this area, or even if I take the buys off of this area, it's a different setup I'm playing with, and I need to come up maybe a little bit early and stuff like that, right? So I'm not taking the buys off of this area. So let's clean this. So I won't take the buys off of this area. I want prices, first of all, to come back to an area I'm really comfortable trading off of, and it's just this trend line. So now you can see the trend line, because the trend line is something I play with. It's something I've studied for some time. So I'm more comfortable if price comes back to that area, then I see some kind of inability for prices to go through, then I can take straight off of those areas, right? So let's keep going. So as price starts coming to the downside, this piece right here is not my concern, because I know if I get in at an area like this, no matter how wide my stop loss is, it's going to be a problem. Why? Because there's a high tendency for price to pull back to this area. Are you saying? So there's a tendency for price to pull back to this area, and I don't want this stop loss to be crazy wide. So the placement of that stop loss at that point is not dependent on the time frame, but it's dependent on the setup I'm playing with. It's dependent on the structures we're looking at. I'll show you something again really quick. So look at this piece. Let's see. So look at this piece right here. So you see this price coming down. There's this inability. There's a buy, but then price sweeps this area out. Once we get to this point, then there's a reaction to the upside, right? It happens frequently. It's something that happens all the time. So let's clean this space. Let's clean this. And I just wish I can go back in time and show you a couple of examples. It's gonna be on lower time frames per se. So if you break this piece right here, let's zoom into this area. So if you had another piece right here, so let's say you had a trend line in here, right? So that's your trend line right there. Now, if you step down to, let's say, lower time frames, the same structure I'm showing you, you'll see it. Like if you look at this piece right here, this price coming to the downside, right? As price comes to the downside, you see there's an initial push to this area, then price stops. It gives you an initial buy to the upside. So if you was taking buys off of this area and you place a stop loss here, there's a high possibility that stop loss is going to get taken out, right? Because if your principle, if your trading philosophy, if the idea you're trading is based off of trend lines, then no matter how wide your stop loss is, it's still going to take you out. Why? Because price is not going to the area you're paying attention to. But once price gets to this point, it's a different story, because you know any hesitation around this point, any difficulty for price to go through this area, you can then place your stop loss as you see price moving now to the upside. You can then place that stop loss even here, and you go with this piece right here, and you're good to go. for example. And depending on how you want to manage this, if you want to hold this longer, it just depends. But you see, even at this point, there's a reason why you're placing the stop loss below this area. So let's come back to this example I was showing you right here. So it's the same thing when you look at this piece right here. So when I had this position, so I had price reacting from my trend line. So that was just one reason. So I was sat here looking at it and I had this interaction from this trend line and I didn't see price breaking impulsively to the downside. It didn't break impulsively. So there's a 4-hour time frame. The first 4-hour candle came in, second 4-hour candle came in, right? And after that, you could see price reacting from that area, which is just, I think it's a simple structure I play with all the time. I just wait for prices to come back. Then I'm looking at that trend line. It's like a support area. And I'm looking at it
Okay.
like, how is price going to interact from this point? And it starts moving away to the upside, right? As it starts moving away to the upside, I had to go little on lower time frames like the hourly, and there's certain stuff I'm looking at on those other time frames. But as price pulled back to this area, I was very okay taking my trade from that area right there. Now, I didn't put my stop loss here underneath this area, and I had my stop loss underneath this area. Now, is it wrong for you to put your stop loss here? No. It's okay for you to put your stop loss there. It's going to give you a better risk to reward. But the chances of this piece surviving compared to this one is low. So your stop loss placed underneath this area right here has a higher chance of survival compared to the stop loss you place underneath this structure
I agree.
right here. Because when you look at this piece, it's very, so you're looking at these two areas. Sometimes there's this grid that comes in, you're a little bit, so you're like, all right, I just want to place a stop loss here so I can get a good risk to reward. But at the same time, you need to strike a balance. Are you going for risk to reward, or are you going for a good setup and valid setup and stuff like that? If my setup is valid, my primary aim is to protect my capital. And if I want to protect my capital, then initially I want to put my stop loss where I know there's a high probability price is not going to take me out, right? So the high probability right here was this area right here. So I knew placing my stop loss here, it gives me enough time, first of all, to read this price in case I made an error with the entry and anything. But apart from that, it's just, this is a protector spot right here. Because you can go back in time and see every time price comes back to this area, it does a manipulation, does all those things, then it starts moving to the upside. You look at this lows right here, it's never taken up, right? You look at this lows, I hope you're seeing.
Yeah.
Hold on. So you look at this lows right here. So you look at this space right here. If you had a stop loss below this area, perfect. It wasn't taken out. Once price came impulsively, it had the reaction and then it started moving to the upside. So I'm using previous price action. I've tested this, I've back tested this and seen if price comes back to this trend line, if there's an inability for price to break through, as it starts moving away from the trend line, now I can place my stop loss here. Correct? So when I come and I look at a situation like this, price is coming again to the downside. Impulsively, there's a reaction here. There's an inability for price to move to the downside. As price starts trading away, if you get an entry here, you get an entry here, you get an entry here, or you get an entry here. If I place my stop loss here, there's a high probability price is not going to take me out. And that was my first position right there. So that was the reason I had my first entry. So the entry and the stop loss depends on the structures you're looking at. It depends on the system you're trading as well. So for some people, it might be completely different, but because I use trend lines, I'm just showing you what I do, right? I'm showing you what I do. So that was my first entry. Now, the first entry had a wider stop loss. Take note. I had a second entry. So let's minimize this. That was the first entry right there. Cool. So I had the first entry. The stop loss was really big. Oh man, what did that do? Perfect. So the stop loss was really big on that first entry right there. I had a second entry at an area like this, right here. And this stop loss was tighter. It was like a very tight stop loss. And I had something like this. Because I remember at the time when this went to the upside, I think I was playing with about 7% or so. So I had a very tight stop loss on my second entry right there. Do you see the stop loss for the second one? When I had the scaling, when I had my scaling position, the stop loss was really tight. Now, when you look at this, it's the same principle, and I think I explained this. When you look at the stop loss for the second entry, the principle remains the same. As price took off to the upside, this is what I was looking at again, right? So can you see what happened? Price gave you the same structure. It was an impulse, then you had a correction. Again, I had to step down to lower time frames. I'm just showing you this on the 4 hours because we're on the 4 hour time frame. So when I placed my stop loss, it had nothing to do with the time frame, but it had everything to do with the impulse and the correction. So in this case, the pullback was, I'm sorry, in this case, the stop loss was a very tight stop loss, but it has nothing to do with the time frame. It has nothing to do with the fact that I'm swing trading. No, it has everything to do with what the market was showing me, like with the structures we was playing with. Nothing to do with time frame. If I had an entry on, let's say, the 15-minute time frame, yes, the stop loss was going to be tighter on the 15-minute time frame, for sure. But if that structure you're looking at on the 15-minute time frame aligned to what's happening on higher time frames, the time frame has nothing to do. And you can have a very tight stop loss even sometimes during news events, and price still plays out in your direction without any issues if you had everything done correctly. Now, if price has taken out the levels he wants to take out, if the manipulations have come in and everything, if the resistance part or the support part price has got into and it's finding it difficult to go through those areas, if price has had those things already and it's aligned and ready for it to move, you can have a tight stop loss and you're still good to go. You can have a wide stop loss, you're good to go. Now it comes down to experience. It comes down to time in the market. It comes down to testing and refining. So over time, I'm refining my setups as well. I'm refining my entries. I'm refining my stop losses. So at the end of the day, I will sit back and ask myself, I had an entry right here and I had a stop loss right here. So what makes price react from this area and move to the upside without coming back to the downside? Because now I have this volume right here for my stop loss. So when I start studying again, now I'm just improving on everything. I'm asking myself, why is it that price finds it difficult to come to the downside? Is there something I'm not seeing that can help me reduce this stop loss? So instead of having my stop loss here, could I place the stop loss around an area like this? Now, what can I look for that helps me tighten my stop loss? But it comes over time. You cannot have tight stop loss on day one. No, it's not. It takes time. The first thing is just building the consistency, understanding the entries and understanding the stop loss placement at a point where there's a high probability price is not going to take it out. Because you want to build a consistency, just seeing the wins and seeing how it's playing out, right? Once you have the consistency, building the wins and everything, you can start tightening the stop loss. So when I had a tight stop loss here, it takes time, it takes courage for you to even scale in into a position. It's not easy, and I don't scale in all the times. But my scaling positions always make more money than the initial position even. And the scaling position I had took a lesser time, and it was giving me almost 1:7. Because I remember at the time I was looking at the position thing, and I think I was up 6 or 7% on my scaling position. While on my initial position I was only up about 4%. It comes with time. Yeah, it comes with time. Placing that stop loss comes with time, and it comes with you understanding the system you're working with. It can be any system out there. So if you're using support and resistance, you need to ask yourself, what makes a support and resistance valid? Right? What invalidates the support and resistance?
I only trade trend lines. I only trade with
Okay.
I don't support that.
If you're trading with trend lines again, if you flip, so you know if you have a trend line this way, the only difference is you have it slanted to the side. If you flip it this way, just like what people do, it's so This is something I also realized. I think I was looking at I was discussing with a friend the other day, and I'm like, hey, we say we're trading this, we're not trading that. But if you look at it logically, we're just doing the same thing. The only difference
Same
is I'm
thing.
looking at it slanted. If price
Mm.
comes and it's difficult for price to go through this area, then this line is supporting that
It's
price
your
not to
support.
go.
Mm.
And if I have it on the upside, then it's resisting this price to break to the upside. So now the difference is another person is going to say, all right, mine is this way. So it doesn't really matter. But the most important thing is, do you understand your system to the factors, like everything, like the details of your system? Because if you understand it, and depending on how you've built your system, you should be able to have check marks, things that tells you I can't place a stop loss here, but I can place my stop loss here. Once you have those things put in place, then it makes everything completely easy for you. But you need to understand the structures you're playing with. And if you've tested the structures, if you've tested the system, if you've tested, first you need to test it. So one reason why you're having the issue is you've not tested. I don't know if you've tested or if you've not tested, but if you've tested over
Oh, I'm
time,
still on it. I'm still on it.
okay, perfect. So if you're still on it, that could explain why you're having that difficulty, and it's completely okay because it's a good thing you're having the problem because it tells you if you can solve it, then you move to the next problem. Because now the problem is with the stop loss. Once you're done placing the stop loss, the next thing will be the target. So you look at this position ahead. And at the time we got to this point, so sometimes there's people who will close that position right here, but I had to wait for this trend line to get violated, and I think price was around an area like this, and I was like, cool, I'm going to close it. For some people, they'll go with a fixed risk to reward and say, if this thing moves 7%, I'm closing it. You see, so today is just a stop loss placement. Tomorrow, it will probably be the target point because sometimes you start trading and then you're like, no, I'm not satisfied with 1:2. I want 1:4, I want 1:5. Another person will tell you, no, I just want 1:1. So you as a person, you need to understand yourself, you need to understand who you are, you need to understand your tolerance level. Then you can become comfortable maybe taking 1:1.5, maybe taking 1:2, and not looking at what other people are doing. Just you, what are you comfortable with? It comes the same way with a stop loss. What are you also comfortable with? When you have a tight stop loss, what are your emotions during the trade duration thing? And when you have a wide stop loss, what are your emotions during that period? So now you also have to ask yourself certain questions. What time frames do you want to pay attention to? If you're having anxiety once you step down to lower time frames, then keep those time frames aside. Use higher time frames, the hourly, the 4 hours, the 8 hours, and stuff like that. Play within those time frames and see if you're less stressed out on those time frames. Place your stop loss based on the structure you're seeing on that time frame. Why you're starting. Over time, you'll refine it. But in the beginning, you just want to build confidence, you want to build reputation. And once you have those things, you can tweak it. It's like driving. The first day when you start driving, you're respecting everything they told you when you were practicing during your driving classes, right? But once you become good and comfortable on the road, you can lean back, you can you can drive and talk to
And
somebody in the
direct
back
only one
seat.
hand.
You're driving with one hand, but in the beginning it's not that way. In the beginning you're like focus like this, 3-9 position, like you glued to the road,
The road.
and you find it even difficult to look left or right. It's okay. It's fine. So it's the same thing. When you start, you might have that difficulty using tight stop losses. So even if I show you where I put my stop loss, and I show you how tight sometimes it is, and I tell you, all right, go do it. It might be difficult for you because you're just starting to place those stop losses as well. But when you do it over time, and if you're doing it with other people and they're like cool, I'm having my stop loss there, you're communicating and doing all those things, then you're building confidence, you're building reputation. And then over time, you start getting comfortable. Now you're like, all right, cool. I've had my stop loss here, but there's a way I can tighten it. But before you tighten the stop losses, you need to build reputation, you need to build consistency. And again, the stop loss placement should not be your worry right now. Your worry should be, do you have a system that works? Do you have a structure that works? Because if those things work, where you place a stop loss really has affect the way you're looking at it. If you have your system that you know this thing works, it's a pullback, I'm looking at this. If it works, that's fine. Where you place a stop loss should not really worry you that much. So
Okay.
yeah,
Okay, my system is with the trend lines.
yeah.
Sometimes I find my trend lines. I hate it when I have to adjust my trend lines. You see, it looks as if it's being broken, and then price reverses, then continues, and you have to adjust your trend lines. So I stopped using or drawing the trend lines myself on my charts. So I started using trend line with breaks by Luxago, the indicator. So once my trend line breaks, I wait for the retest on that trend line, and then I take my entry. The reason
Yeah.
why I'm struggling with the stop loss is this. I'm trying to decide between. I feel it's best when your stop loss is always constant. Let's say for me, I don't use percentages. I use pips. So let's
So
say
you are like
if I
25
see,
pips.
yeah, if I see my setup, if my trend line is broken, I wait for the retest, and it happens. I take my
Yeah.
entry, and my stop loss should always be constant. It's a constant figure. So my stop loss, let's say
Okay.
100 pips below the entry, or
I
150 pips
understand.
below, or
Yeah.
200 pips below.
And you just want to use a constant stop loss all the way.
Yeah, yeah. I
So
want it to be constant.
when you do something like that, it has the pros and then it has the cons. Let's take this piece right here. Let's stay on this same chart. For example,
Okay. Okay.
we're looking at a pullback. Sorry, we're looking at an impulse correction for us to trade, right? So, and we want prices to come back to a trend line so we can trade off of that trend line. If you look at this space, not saying what you're doing is wrong. No, it's correct. You can have a fixed stop loss, you can have a varying stop loss. It doesn't really matter, but there's pros and there's cons, and you need to decide at the end. I'll show you how I look at it. Then it's up to you to decide. So look at this. If price comes to this area, this trend line, price is tapped on this trend line, right? And it
Yeah.
starts moving away. So I want, let's say I want prices to pull back so I can get an entry. And for some reason, price pulls back and I only see the entry at this point. And let's say our rule-based system is price gets to this point, it moves away, we wait for the pullback, then we get an entry, right? And our stop loss goes below this point. Now, for you, so personally, I'll get an entry here and I'll put my stop loss here. But because you're looking at it with a fixed base stop loss, that's why you're having the issue with time frames sometimes. Because you might have a 20 pip stop loss sometimes on let's say the 15-minute time frame, but you can't use a 20 pip stop loss on the 4-hour time frame. Because if you look at this piece right here, this entry to this point, it's not gonna work. This right here is structure based, it's based on the structure. So if I place my stop loss every time based off a fixed pip value, what if price gives you, how can I put it? So let's look at this. For example, if I place my stop loss here and it's 20, right? I'll get a 20 pip stop loss and it's a valid trade. What happens if I have to trade this space right here? So are you going to let this, so if you see this setup and everything is valid, will you just let this because you don't have a 20 pip stop loss? Because if you have to do the same thing, 20 right here, you'll get stopped out. But you're not getting stopped out because the setup or the rate is wrong. You're getting stopped out because you're just fixed on a 20 pip stop loss. Structure is going to be different, and sometimes even on lower time frames, on the 15-minute time frame and all those things, you might have to place your stop loss at a point where if price takes it out, then it's invalid. And sometimes it's not 20 pips. Sometimes it's not 20 pips. Sometimes it's 40. Sometimes it's 50. Sometimes it's 15. You get. So if this
Yes.
price, hold on. So let's look at this. Let's take this out. You know what? Let's clean this. So if this price came down, so let's look at this page right here. Enter. So what happens? Let's say if I took this trade at an area like this, right here, perfect, right? So that was my entry right there. and another person came in a little bit late and he had an entry right here. So at this point right here. So you're looking at this space. We're looking at the same structure and we're taking this straight at the same time. My stop loss is wider, not because my stop loss is wider, not because of the time frame or anything. First, I came in late looking at the position, so I had a late entry. The first person had an early entry, so let's take this out. So he had an early entry, had a really good stop loss and everything, and he was in the trade already, right? So if you had to put your entry here and a stop loss of let's say 20 pips, and then price comes down, it takes you out and starts moving to the upside. Whereas somebody else puts the stop loss below the structure, which is more protected. So you're giving your trade some room to play. So you're giving that trade some room to play just in case there's a pullback, in case there's a news event even. And that's why sometimes it's easy for me to survive the news events and stuff like that. Because if I have it at a protected area, it can wick through this area and go back to the upside. But if I had a fixed stop loss 20 pips, what makes you think the price is not going to come back to this area? The reason I'm putting my stop loss here is because if price breaks out of this area, then we're looking at a different thing. So it's been an impulse, it's been a correction, and price has taken out the lows. It's been an impulse, it's been a correction, price taking out the lows. It's been an impulse, price moving to the upside. There's an inability for price to take out these lows. So I can place my stop loss here and get those entries anywhere here because I know it's protected. Now I see it moving to the upside because this confirms more than that it looks dirty. So let's do it. So just give me a second. I'll do that explanation one more time. So I think you can grab something from here. All right, let's clean this. Let's take this out. Do this and perfect. So I'll place the entry thing one more time. So let's place it right here and put the stop loss below this area. Now let's do the read, just a simple read, and let's say we're taking prices to the upside. So you're sat here looking at this. You have a 20 pip stop loss, but we're trading the same thing. We're trading an impulse and a correction. So when I look at my impulse correction, it's an impulse, it's a correction, and then price takes out the low. It's an impulse, it's a correction, price takes out this lows. It's an impulse, it's a correction. There's an inability for price to take out this lows. That's the reason why my stop loss goes below this point. So as you get the reversal and you see price moving away, now I can place my stop loss here. So this area for me is protected. It's protected. So it's not based on the 20 pips, it's not based on the 30 pips. And I'm not saying 20 or 30 pips is wrong. No, I'm just saying the logic why I use this system is because I've seen price rejecting at this area. I've seen price going away, and looking at previous price action, it's always been a pullback and then it takes out the lows, pullbacks, it takes out the lows, pullbacks, it takes out the lows. And in this case, there was a pullback, inability for price to take out those lows. That's a valid reason for me to put my stop loss there. And once I have price this way, so I'll look at this piece right here, for example, and I'll ask myself, if this is my target point, I'll ask myself, what's the risk to reward on this position? That's a 5.76%. So I'm okay taking this position because I know if I'm risking 1% to do 5.76, that's good. All right. Another person might say, okay, I just need a 1:2. If price gets to a 1:2, I want to take it out. That's it. So you see, there's lots of ways you can mix it, you can play with it. So if I had a 20 pip stop loss from my entry, once you go in, you see price wick down a little bit before moving to the upside. That might have taken you out, but you have a valid structure. You have a valid structure, and then price moves in your direction, but it wicks you out first. So it's just getting comfortable. And again, but if you've tested the 20 pips, or let's say if you've tested a fixed pip stop loss and it works for you, that's fine. I used to do the fixed pip stop loss, I think about like 4 years ago. Yeah. And then it just didn't make sense with the way I was looking to price it. But there's systems out there that it works best with the fixed pip stop loss as well. But my system doesn't work with the fixed pip stop loss. I need to be flexible with the stop loss depending on the structure I'm looking at. Does it make sense? And
I
you
get
can't
you.
fix everything today. It's one step at a time. So
Yeah.
let's say this: go back, drawing board, start again from scratch, put everything down, and look at your structures, look at your system. I don't know this. Yeah, so I know you're doing trend lines as well, but look at every piece of the trend line, and you need to understand every piece. Then the stop loss should be the last thing, or it should be one of the things you look at the end when you're looking at the entry. But for now, you want to understand the pullbacks. Because if you understand your pullbacks and you understand you're not buying from this area, but you start getting interested once price get to this point, then the
Sure.
stop loss placement is just like, all right, cool. I've seen price not taking out this area, so I'll place my stop loss there. You see, and then you test it over time, and then now you have a system that works for you, and that's it. So yeah, does it make sense?
Yeah. It definitely makes sense.
Yeah. So there's a lot to work on, and not just the stop loss placement. But again, we can go through over certain things later, and I'll show you. But just looking at it this way, that should be the basics of everything you do. Understanding the read, repetition, consistency, and you're doing it over and over again. Over time, you build confidence, and yeah, it's just everything starts coming together, and it makes it easy. Yeah.
I used to draw these the way my trend lines the way you yours, but then with my indicator that draws my trend lines for me, my trend lines are very different from
Yeah.
yours.
Yeah, it's fine. It's
Ah,
yeah, it's fine. I've seen you see like the same price action we're looking at. The beauty about this whole thing is I might be looking at this trend line this way, and there's another person that's looking at something completely different. So I'll show you. So let's take for example, I might be looking at the wicks, and there's somebody that's looking at the bodies of the trend lines. I mean, the same price action, but you're drawing it differently. Which, and again, that's totally fine. The most important thing is when you put that trend line there, do you have a reason for placing the trend line? Or are you just placing the trend line because they say you should place the trend line? So if you have a reason behind the things you're doing, then it's fine. And not just a reason, but a tested reason, like something you've tested and you're like, all right, cool. So there's somebody who will not even look at this trend line. So there's people who will not look at this piece and consider this trend line within this area. For some people, they just want to stay with this major trend line. For some person, they might look at this piece and there's a trend line within this area coming to the downside, or there's a channel. For some people, it's like, no, I'm not interested in that piece, which is totally fine. But your focus should be, if I'm placing this trend line here, there's a reason why I'm placing the trend line, and there's certain things I'm looking out for. And I always tell my friends, I'm like, everything I do has a 50% chance. So even my stop
yeah,
loss placement is a 50% chance this is going to hold through, because price can still take me out. This trend line, there's a 50% chance this trend line is going to hold through. Price can just come through the trend line and break through. My psychological level, there's a 50% chance it's going to work. When I place a trade and I'm walking away, there's a 50% chance it might go to the upside. It might just reverse and come to the downside. But that's not my problem. So every other thing after the trade placement is just a probability.
yeah,
If you've done everything correctly, and if you're doing the same thing every single time, once you place that buy or sell and you walk away, it's a probability game at that time. It's just like you can literally place it and walk away and go sleep and come back. If your stop loss has to get taken out, you'll get taken out. And you can
yeah,
place that trade and sit there and look at it. The stop loss is not going to get taken out. You can place that same trade and travel, and you get to your destination, and everything is still intact because it's just a probability thing. It's probability based, and it's not fixed. It's not certain. So yeah, you can do your best, trade, test, back test, refine, and don't refine too much. Just refine one thing at a time, and then you see if it's working, and try not to tweak your entire system. So my system is based on trend lines, impulse, and then the pullback. That's the only thing I look at. But within this pullback, if I tell you the rate you have for this pullback before price even gets to this point, you saw the stuff I was showing you, the schematic I was showing you behind.
yeah, yeah,
The schematic I was showing you is just me reading this pullback. So before price gets to this area, I've been reading this, just
Yeah,
discussing with.
long time.
Yeah. And again, it's on the 4 hour time frame. But we've been doing stuff, we've been looking at this space, this space, this space. So once price gets to this point, we've sat through all of this. And if we're even taking these positions here, placing the stop loss here, we're like, yeah, we've done the read on everything. So this space right here is just the final part, and it shouldn't really bother you because it takes time. Like, and on this same thing, the funny thing, you see how price is making this impulse and a correction, impulse and a correction. If you put a trend line thing right here, the same structure I'm looking at, you can step down to lower time frames and look at the same thing, and even trade it in the opposite direction. But if you know what
Yeah.
you're doing and you need to understand why this price got here, there was an inability for the price to get to these highs. So once there's this inability, and if you know the read on everything, and you're very sure price would then take out these lows, as price starts moving to the downside, it will build up in lower lows and lower highs. And the same thing was looking at here. You can flip it now on the other side and then look for these sells. Sometimes it's easy to spot it, sometimes it's difficult to spot it. I mean, in the real life market situation, sometimes it's difficult because you're looking at it, you're looking at other factors, and yeah, sometimes it's easy, but it takes time, man. It takes time. Yeah. And it comes with lots of losses, lots of losses, lots of
Lots of
losses.
losses. Lots of
Yeah.
losses. For
Yeah.
since I started trading, I would say this year or like later part of last year is
Yeah.
when I really got my act together and came to a point where I can say I now know what I am doing.
Mm-hmm.
It
Takes
took me
time.
all two plus years just to get to
Takes
know
time.
reduce the losses.
Yeah. It takes time. And sometimes you need to get hit in the face like a couple of times for you to say, okay, so for example, you put your stop loss here, price takes you out. You put your stop loss there, price takes you out. When you lose enough money just placing that stop loss here and price keeps taking you out, nobody's gonna tell you. Naturally, your defense mechanism is gonna kick in and you start placing it here. It's naturally, once you lose to a certain point, you do it that way. So sometimes you need to go through the losses as well, like embrace every loss. So every
Learn it
loss
the
you
hard
take
way.
is not, yeah, learn it. And sometimes me explaining it to you is not gonna make sense unless you put your money in, it takes you out. You put your money in, it takes you out. And then, even without me telling you, you place it somewhere that makes sense because you've been beaten so many times. And just know there's lots of manipulations happening. This market is not designed for you to make money from it.
Yes,
It's
definitely I know.
designed for us to
I know.
lose. So if something is designed primarily for you to lose because you're playing with institutions that have algorithms, they have machine learning. So it's designed for you to lose. I mean, they have data that they've studied this data, so they know where like there's we're playing in a very big pool and you're very
Just
small.
a tiny fraction of it.
Yeah. So if you understand it, your primary focus has to be protection first. Protect the capital. Protect the capital. It's like you have a big plate of cake right here. When you come in the market, all you want is just a fraction of this. Let these big boys play with this other part. This is all you're looking for. This is all you're looking for. So the first thing, protect your capital. Get your power or get your fraction and walk away. If you can do this every time, every time, every time, protect your capital, get your fraction, walk away. Take that capital, get that fraction, walk away. It's going to help you. And one other thing, don't look at what people are doing a lot. You can look at it for motivation, but you need to come back to you and what are you doing? What are you looking at? What are the improvements you're doing every day? Yeah.
But
So
I think I can say that I have passed that stage.
yeah,
I don't look at what people are doing, what people have set up, what set ups people have posted on online. I don't
yeah,
look at that. I always concentrate on what I am doing.
Just say, for example, we've spoken about that time frame. When you leave now, you know it's not the time frame that's the issue. It's not the
Yeah.
time frame, and sometimes you need to test it. So place that trade on the 4-hour time frame, place it on the 15-minute time frame. You see the same thing you're trading. So now, how much time do you have is what matters. So if you have the whole day, then you can go on lower time frames. It's the same thing. Impulse correction. If you have less time, 4-hour time frame, impulse correction. It's the same thing. It's the same thing. If the fixed stop loss is disturbing you, all right, say cool. Let me be a little bit flexible. Where's the protected area I can put my stop loss and walk away? That's another way to look at it. So yeah.
The two advantages I gain from using the fixed stop loss. One is psychological, because my mind can accept my stop loss. Let's say I have a fixed stop loss, so I know if I enter a trade, worst case scenario, I'm losing, let's say, $100.
Yeah.
Or $50. I can accept that. But today 100, tomorrow 200. That means I would have to reduce my position size, and I don't like reducing my position size. If I'm using 0.10, I'm using
you want to
0.10.
use the same 0.10.
Yeah, I want to be constant, because my trend lines are not the traditional way like yours. For example, this very long setup you have here, my entry would have been somewhere in the middle here, because my trend line will be from, let's say, this setup coming will be on this one coming down, and and when we break that trend line, I'll wait for the retest on that trend line, then I'll take my entry with there.
Yeah. So what if the thing that is holding you back is what you don't want to do?
It's possible. It's possible.
So look at it. You can have blessings in difficulties, right? Maybe the one thing that's holding you is calculating the position size every time. Calculate mine every time. Maybe the thing that's holding you back is not being comfortable with the fixed stop loss or the fixed thing because it's easy, it's comfortable. What if you go through your difficulty and you have to calculate it every time and you have to do the placement at the right place? What if you have to take that extra step and do those calculations? Maybe it can switch everything for you.
Okay.
Look at it
that way.
Don't look at it. Don't look at it from comfort. Don't look at it from the point of I'm comfortable placing my stop loss at this point. Look at it from the point, what if the only thing I had to change was to calculate my stop loss every time, get good stop losses, get a good lot size, and it can change everything. It takes less than a minute to calculate every time, especially if you're doing just a single pair or I don't know. It's easy. Yeah.
I use 2 pairs, gold and then oil.
So it's easy. It takes a minute. Once you're looking at your setup, before price gets to this point, you can already anticipate how much. So if I place my risk to reward at this area right here, if I place my risk to reward here, my entry and my stop loss, I can calculate this before this price gets to this point.
Okay.
So my risk to reward I just place everything and I'm playing with it, the price and everything. I'm like, all right, cool. Now we've gotten there. All right, cool. I need 0.3. Fine. I just place 0.3. Maybe that's all you need. Maybe you have something beautiful that's working like perfectly, and all you have to do is just take that extra step and get that calculation in, and that's it. So look at it that way, not the other way around.
That's a very good advice. Advice.
Perfect. Yeah, I think we've done a lot today, so we'll still meet up, and anytime, like if you have the issues again, just meet me and then let me know, and I'll see. I always hop on this call and see how I can help you. Yeah.
Okay. Thank you.
But was this helpful today?
Oh, of course. Very, very helpful. Very, very helpful.
All right.